All right, let me use this to show you the example. When you are saying what you are saying, I was just smiling. All right, so basically, this is how to be able to see some of those patterns I talked about. So with this commodity, this is volatility index that I'm using, and we are on the 1 day time frame. Okay, so now in forex trading, I'm supposed to teach you this later, but let me just um touch it a little. Later, you will still talk about it. For you to be able to do a proper analysis, you must analyze using different time frames. All right. So when I touch this screen now, you will see 1 minute time frame, that is M1. You see M5, that's 5 minutes time frame. That's what that means. You see M15, you see M30, that is 30 minutes time frame. You see H1, that's 1 hour time frame. You see 4 hours time frame. You see 1 day time frame, that's D1. Then you see W1, 1 week time frame, and then you see 1 month time frame. So if I click on any of these, it will bring me or show me what the daily movement of this market is doing. Okay, now for you to trade properly, depending, I am a scalper. Okay, I'm a swing trader. So I don't last in the market more than 2 hours, 3 hours. Sometimes I enter market 30 minutes, I'm already out. You get, so I like doing my analysis with from 1 week down. Why I do 1 week down is for me to have a clearer picture of what the market is doing. Okay, now when you click on 1 minute time frame, okay, the market will give you what 1 minute is doing at that time. So 1 minute is like a zoom in of what the market is doing, of what the market candle is doing. So all these candlesticks you are seeing here now, all these things you are seeing are candlesticks. The red one and the green one are candlesticks. The red one is a selling candlestick or the bearish candlestick, while the green one is the bullish candlestick or buying candlestick, whichever one you want to do. All right, so what I'm doing now, if you notice what I'm doing, I'm zooming out. That is when you hold on your screen, you spread your fingers away from the screen, it will zoom in. Then when you pinch it back, it comes back. Can you see what I'm doing? So that's how you can do it. So if you want to zoom in to, maybe you want to have a feel of what the candlestick is looking like, you can do it. But I like keeping mine this way so that it can accommodate more things. Okay, so this is basically that for your um time frame. I don't want to go into a lot of details on time frame because we're going to talk about time frame, but I've shown you how to do your time frame. So when you click here, let's see, I just touched 15 minutes, so it's going to show me what 15 minutes is doing. So look at what 15 minutes is doing. So with this now, each of the time frame you touch or you enter, let me go back to the one, you analyze the market, you check what the market is doing there. Okay, until you keep analyzing. There's what is called top down analysis. What it means is using your time frame, you start from 1 week time frame, you find out what the market is doing, do your analysis. Is market buying? Why do you think the market is buying? Then you go down to day one, that's 1 day time frame, you find out what the market is doing there. Is the market also buying at that point, or is it selling? Because now the market may not show you the same thing in different time frames. You may be seeing a buy on a 1 week time frame, but you will check 1 day time frame is showing a sell. Okay, but the higher the time frame, the more it shows you what the market is doing generally. For instance, if you go to 1 month time frame and you are seeing a buy, it means that that market is generally buying. But when you go to 1 week or 1 day time frame and you are seeing a sell, it means that that market is just doing correction to continue to sell. Sorry, to continue to buy. But if your the biggest time frame is what is showing you what the market is doing generally. So I just want to pinpoint on this so that you understand it. Okay, so now for you to do your analysis properly, you must use all the time frames, and then you enter with 5 minute time frame or 15 minute time frame. Why? Because you are a day trader or a swing trader. You get the point? So you always enter with your 5 minutes after you must have analyzed using all the time frames starting from 1 week down to 5 minutes time frame. Okay, so in this 1 day time frame, you can see my trend line. I taught you about trend line. I taught you about trend line where I talked about breakout. Okay, see now, this is my trend line. I drew it here. You can see it's on the tips. Sometimes I put it on the body of the um commodity or candlesticks. Okay, so now look at what happened here. If you observe, let me pick something and use it. Okay, so if you observe, they were obeying the my um trend line until it got to this place. It got to this place, he broke it. Can you see? So when there is a breakout, now you see it started going down. So it's a confirmation. Okay, it's a confirmation that this market will go down. I hope you understood what I just did here now when I talked about breakout. You see what happened. So he broke out and then he started going down. So whenever there is a breakout, is a signal to enter for a buy. But like I said, it's not yet complete. You also have to wait to see some other confirmations on your candlestick before you can enter. Now look at this one again. Look at this red one I drew here. I drew here. You see, I was able to join two lines, two points. Sorry, yeah, 2 points. I joined 2 points. This point and this point. Now you observe that it got here. The market was doing its normal thing, obeyed the trend line, obeyed the trend line. It got here, touched, came back and broke it. Immediately broke it, started going up. You see, so this is a breakout um trade. So you follow it and then it started going up. You see, these are breakouts. So I taught you under trend line, drawing off your trend lines and how to use it to trade. Okay. Then I talked to you about chart patterns. You said you couldn't see some things. You're just seeing the whole thing like that. Now let me still show you some chart pattern that I can see here. I may not show you all the chart patterns, but all you need to do is to look closely, then keep changing your time frames and observe closely. You can pinch the chart to see closely, or you can zoom it to see closely. So now let me still pick this. Okay, so if you observe here, this one here now, this is here. Sorry. Okay, so here, from here, you see, this is a double bottom. It's called double bottom. Okay, immediately this created a double bottom here. From this point, here, you can enter the market and take it up. Okay, from this, you saw that shape I created now, the chart shape. So when you create that W from here, 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 this is a double bottom. Now what is the bottom? This bottom here and this bottom here. So from here you can enter the market up coming here. This is called double bottom. Okay, in the chart pattern I showed you. Okay, now let's also look at here. I told you about reversal pattern. If you observe, this market here is going up, doing its thing, going up, going up. Here it started to reverse and then it came down. What happened? Let me tell you now. This mark here, whenever you see it, just know that the market is about to a chart pattern that gives you one of the chart patterns or one of the reversal chart patterns that whenever you see it, you know that the market is about to change its course. That is, if the market was buying and you see that chart pattern, it means that the market is about to buy. That is, if it was selling before, and if it was selling before and you see that chart pattern, you know that it's about to buy. Now observe this from here. This is called head and shoulder. This is head and shoulder. Okay, it's head and shoulder pattern. This head and shoulder pattern. And then if the market was buying, this one now was buying and they wanted to sell. This is head and shoulder buying. If you wanted to sell, oh sorry, if he's buying now, he's buying at this from this point. Now he wanted to change course and he created head and shoulder, which made it to start going down. Okay, that is creating a sell, changing the pattern from buying to selling. Now, if the market was selling and he wanted to change, it will still create the same thing. Now it's now called inverted head and shoulder. Inverted because it's upside down. Get the point? So these are the few chart patterns I can point out here. There are many other chart patterns, there are thousands of them, and other rules and shapes. So you just look closely on the chart. You can go ahead to pinch it closer to see what you want to see. If you pinch it closer, it will give you a clearer picture, and then you can also go to a bigger time frame, to 1 week time frame. Each time frame always have something it's going to show you, with which you can denote what the market is doing at that point. So, and then if you want to now enter your trade, you use your 5 minutes or 15 minutes time frame. That's after you must have analyzed using that same time frame. 5 minutes, let's go to 5 minutes. Brings you to 5 minutes. It's loading. Okay, 5 minutes. Now 5 minutes is showing a buy. Get the point? If you still look at this now, you will see the shape that is showing here. So this is how you look at it closely and you pick and you understand what the market is doing. See, this is it. You see. So the market keeps going like that. And if there is a break in this place, there's a break here, it means that this market will get to this place possibly, or to this place to create liquidity and continue to buy, or from here it can decide to go down depending. Can try to break and start going up, or can try to come down. So these things are not that difficult to understand. Okay.